Welcome back. I'm Pratap here. Today is the 6th March 2025. In this video, let us evaluate the performance of the high liquidity zones. Apart from that, I will also give you another example that will demonstrate the power of pierced zone strategies you learned in lesson 28. Even before that, please note we are providing complete free training on supply demand zone price action. This is a highly expensive training course, but we made it free for all our members, and the complete course is free, and all the training lessons are also available at our NeoStock YouTube channel. At our channel homepage, click on the tab Posts. Some of you might be seeing the tab Community. Click on the tab. You get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into supply demand zone price action course. I kept all the training lessons in this particular YouTube playlist. You need to start your training from the first lesson that is available at the bottom of the page. Just scroll down to the bottom of the page. Here, starting from lesson 1.1, I kept all the training lessons in an order. So please go through all these lessons one by one according to the training instructions I mentioned at our Telegram channel. I provided the link to the Telegram channel in this video description. So please join at our Telegram channel. At the Telegram channel, top of the window, you can find pinned messages. If you click on the pinned messages, there you can find all the training instructions. So please learn this course according to my training instructions. Then you will become a very good independent trader in the coming months. So please make use of this opportunity. Now let's get into analysis of our high liquidity zones. Before you look into the pierced zone strategy, first, let us complete the trades, the high liquidity trades we got from our previous report. The first one we got is escorts. Escorts is a 75 minutes high liquidity zone identified by our NeoStock software. This is a drop, 4 base candles and a drop candle. And this is the one I fine-tuned with 15 minutes time frame. You have a 15-minute zone. We have a drop, 3 base candles and a drop. This is the 15-minute zone. But did you notice any fine-tuned 5 minutes drawn inside? No. Why? Look into the 5 minutes time frame. You will understand. And this is the 5 minutes time frame. And look inside the 15-minute zone. Inside the 15-minute zone, you have a drop candle, you have another drop candle, in between no base candles, and such kind of zones will be violated easily because there is no institutional order flow. That is what happened today. Today this zone is violated easily, the 15-minute zone. That is what you learned in lesson 16. What did you learn in lesson 16? When a zone can be violated, I explained all the scenarios. Before itself, we know this 15 minutes area will be violated easily. That is what happened. But here we got a trade. What is the trade? That is as per the concept you learned in our lesson 22. Lesson 22, you learned a strategy. What is that? Lower time frame zone as an horizon to the higher time frame zone. And it is a very powerful concept. So many trades we got using this concept in the recent time, even today also. See here, you have a 5-minute zone, rally, 2 base candles and a drop candle. Look into this zone. Multiple times this zone is getting tested. That means this zone is acting as a high liquidity zone. See, it is tested here, prices came down, tested again, came down, again tested the zone, again prices came down. And also I confirmed this rally-based drop is also a high liquidity zone suggested by our NeoStock software. I looked into Escort's 5 minutes supply demand zone chain. In Escort's 5 minutes supply demand zone chain, Our software suggested this as a rally based drop, and it is a high liquidity 5-minute supply zone. Apart from that, this 5 minutes supply zone, the high liquidity supply zone, is also an horizon to this entire 75 minutes high liquidity zone. See, the 75 minute zone picked up the orders from this 5 minutes area, and the entire zone is created. And these horizons will be having a very powerful institutional order flows. You know that you already learned all these things. And today we got the trade from this area. Prices entered at what time? At 11 o'clock 10 minutes. And then reached the target at 12 o'clock 15 minutes 5 minutes candle. That means within 1 hour our trade is completed. And it has given you till this 15 minutes target zone. It gave you 1:4.25 RR. Go to 15 minutes time frame. See here, you have a rally, 2 base candles and a rally candle. Till this 15 minutes area it reached. And what is the profit it has given? Let me open the Excel sheet. And Escorts has given a profit 7,305 rupees profit, which is 8% ROI as per one futures margin cost. Excellent profit. Escorts. And the next one is Hero Motors. This is also a 75 minutes high liquidity zone. Drop, base, drop. It looks like this high liquidity zone is violated today, right? But before the zone is violated, we got an excellent trade. This drop, base, drop. So how we fine tune the zone? Go to the 15 minutes time frame. In the 15 minutes time frame, you see you have a rally candle. How many base candles? 1, 2, 3, 4, 5. 5 base candles and a drop candle, high explosive leg out. This is the 15 minutes zone. Within the 15 minutes zone, again fine tuned with 5 minutes time frame. Go to the 5 minutes time frame. Here in the 5 minutes time frame, you are seeing a drop candle. You have 1, 2, 3, 4, 5 base candles and again a drop candle. This is the 5 minute zone. And this 5 minutes area, we got the trade and reached the target. What time it entered into the zone? We got the trade morning 9:15 5 minutes candle. But please notice here one point. If it is a 9:15 1 minute candle, you can't call this trade as a successful trade. Because morning 9:15 1 minute candle, we are not considering for our intraday trades. A lot of issues you get. Sometimes with gap up and gap down, so market will open. If you keep a pre-market order, your trade might be executed in the pre-market, and 9:15 when it opens with a gap up, beyond your stop loss prices will open. You can't handle the risk. Above 2% risk your prices, because market itself opened beyond your stop loss. Imagine how much losses you get. So that's why morning 9:15 trades are not advised for intraday trading. But if it is a 9:15 candle trade, this is not a valid trade. Maybe it might have reached 15 minutes target. It is having 1:3.1 RR is there. Even then, we can't consider this trade. So go to the 1 minute, see what is really happened in this trade. See, morning 1:15, prices entered into the zone. 9:15 1 minute candle. Can we consider this as a valid trade? No, but see what happened next. Again prices came down. Once again prices moved. You got the trade at morning 9 o'clock, 19 minutes candle. So it's a valid trade. It's perfect because it reached the entry. Now after that, see how sharply prices came down, and finally at morning 9:32 candle, the trade is completed, reached the target. Morning 9:19 candle. This is a 32. That means in 13 minutes, that means we can say 15 minutes. Within 15 minutes, your trade is completed. Within 15 minutes, a successful trade. And reached the 15 minutes target. Where is that 15 minutes target? Here you have a 15 minute zone. See here, you have here rally, base, rally. The 15-minute zone, it is a pierced zone. But pierced zones, you have to keep that as a target. You got the entry and reached the target in 15 minutes. And it gave you 1:3.1 RR it has given you. And how much profit it gave you? It gave you 6,090 rupees, which is 6.3% ROI you got as per one futures margin cost. So excellent trade. And one more point you observe. Morning 9:19 you got the trade and completed the trade at 9:30 candle. Your entire funds are released. After that, same money you might have invested in escorts. Escorts is at 11 o'clock trade, 11 o'clock 10 minutes. See, this is at 11 o'clock 10 minutes trade, escorts. That means I am damn sure you would have captured both these trades today. You have to capture because they are very clear trades. One is a fine-tuned trade and another one is a LTF zone as an origin. You would have got a good profits, and more importantly, both these trades, margin cost for one future is less than 1 lakh. Even the members who are having less capital also would have got the trades. Generally, we keep 2 lakhs as a reserve because majority of the F&O stocks are in between 1.5 lakh to 2 lakhs, majority of the stocks. Of course, few stocks are above 2 lakhs or 2.5 lakhs or even 3 lakhs are there. And a few stocks are less than 1 lakh. Both these stocks are less than 1 lakh. If you are having 2 lakhs investment, you would have got to double the profit. You would have purchased 2 lots. If you purchased 2 lakhs, here you would have captured around 14,500 rupees here. 12,200 rupees or close to that you might have captured. So this is the beauty of today's HLQ zones. Look into this, one more stock. Concur. Concur, you see, today this zone is violated and then next zone we got the trade fine-tuned and sharply came down, right? This is a 75-minute zone. First one is violated, second one you got the trade, it looks like, right? But unfortunately, both are not valid trade. Go to the 1 minute, you will understand. See, this is morning 9:15 candle. The zone is violated. Next, continued the same 9:15, reached the fine-tuned area, and looks like you got the trade and then sharply prices came. But this is morning 9:15, 1 minute candle. You can't take a trade. After that you can. See 9:15 candle, see the volatility in the candle, very dangerous. Look into another one. This is again a 75-minute zone. See, we have a fine-tuned 5-minute zone here. We got a trade, sharply prices came down. This is looking like excellent trade, right? But even then this is not a valid for us. The reason is this is also morning 9:15 candle. This drop, 2 base candles and drop. We have a fine-tuned 5-minute zone. See, we have a 15-minute zone here. How I fine-tune, you will understand. We have a drop, you have a base, you have a drop candle, 15-minute zone. Within the 15-minute zone, you have a 5-minute zone. See here. You have a drop candle, you have a base candle, you have a drop candle. And today morning 9:15 prices went into that fine-tuned 5 minutes, sharply came down. But it is not valid. Why? Because this is a morning 9:15, 1 minute candle. Let's go to the 1 minute, you will get clarity. See what happened in the 1 minute. Everything happened. Sharply it went. It got the trade and sharply it came down. But you can't take this trade. If you are taking such kind of trades, do you want to know the kind of risk involved? See Tata Motors, you will understand. Go to Tata Motors. This is also a 75 minutes high liquidity zone. Our software suggests a drop base, a drop. See, today with the gap up, market is open with gap up. So this is the open. Go to 1 minute, you get clarity. Let us assume you placed pre-market and let us assume in the pre-market your trade is executed. Now market opened with a gap. Where should be your stop loss? Your stop loss should be here. But where market opened? Here. Do you know? Can you imagine how much loss you would have got? Maybe it is beyond maybe 8% or 9% on your capital, maybe beyond 10% of your capital. If you are investing in the future, one margin cost of whatever the margin cost money invested, maybe 10% beyond or maybe 5% beyond. But what is the maximum accepted loss? Only 5%. Only 2%, not beyond 2%. This is the problem, investing in morning 9:15 candle or going for pre-market orders. Market opens with gap up and your stop loss will hit and you can't imagine the loss. Okay, luckily prices came down later. If you are still holding, you feel like you are lucky, but is it going to happen like this every time? No. With open with gap up, further it will be moving up. All your capital you might be losing in just 1 hour time period. All your money will evaporate just like that. So that is the reason why we are avoiding morning 9:15 1 minute candle. That gives a clear picture whether we should plan or we should not plan on a particular stock. Anyway, this zone is gone. So it is no more valid for the rest of the day. That is how we will understand. May be valid if you are using some Pearson zone. If it is a Pearson zone strategies and all you can adopt, but not HLQ zone strategies. Okay. So this is what happened in Tata Motors. See one more example. IRB also same. Opened with gap up. This is also a 75 minutes high liquidity zone. Drop base, drop. See today here also market opened with gap up. Market opened outside the zone. Morning 9:15 open. Go to 1 minute candle, you will get clarity. See where it opened market today? Opened here. Sharply came down. Again sharply came up and closed outside. Opened outside. Closed outside. In between sharply moving up and down. So these are the dangers involved. Trading at morning 9:15 1 minute candle. Because of these reasons, morning 9:15 1 minute candle, it will give us a clear picture whether we should select that stock or we should not select that stock. Okay, these are the important lessons you should learn. It's a very, very important lessons from today's market. Okay, there is only one stopped out trade today, that is BHARTIARTL. BHARTIARTL is at daily high liquidity demand zone. Previously, we discussed fine-tuning this zone at the bottom one. But yesterday, what happened? Prices moved out of the zone. While moving out of the zone, a new 75 minutes order flow is created. Go to the 75 minutes. See the newly created one. Rally, base, rally. In this rally, base, rally, we have this is a 75 minute zone. Inside, we have a fine-tuned 15 minute zone. Go to 15 minutes. See here again you have a rally candle, base candle and a rally candle. Rally, base, rally. Within this 15 minutes, again you have 5 minutes fine-tuned area. Go to 5 minutes time frame. In the 5 minutes time frame, you are seeing a rally candle. You have 1, 2, 3, 4, 5 base candles and a rally candle. But this is overlapped at the distal line. We can't say this is LT of horizon. The reason is all candles are part of the base. Some are part, some are outside, but everything is part of this zone. The zone should completely create outside. Then only we consider it is a LTF zone. This is a normal concept only, fine-tuned zone, but fine-tuned at the distal line, overlapped at the distal line. See today what happened? The zone is violated. Because it is violated, remember it is not a 9:15, it is a 9:20 candle. Suppose if you are already in the trade, which trade? In the first one, you got Hero Motors. Hero Motors 919 candle, right? If you would have taken the trade, mostly you would not have got a trade in this. Maybe you planned your capital for 2 trades, that is a different story. If you are reusing your capital for multiple stocks, already you are in Hero Motors trade. That way you might have escaped from BHARTIARTL. But anyway, HLQ zone statistics point of view, we have to, zone wise we have to calculate, not our trades wise. The zone has worked or it doesn't work, that's it. It doesn't work. So we have to capture this as a failed. So that's why BHARTIARTL has given 1,852 rupees loss as per the statistics point of view, which is minus 1.4% ROI, negative ROI. This is the only one stopped out. So total 3 trades are executed. But BHARTIARTL, if you might have applied the strategies learned from the other training lessons, today you would have made a very big profit, a very good profit. What is that? Pierced zone strategy. You may ask why I didn't capture in the Excel sheet those profits. The reason is the pierced zone strategy is not a HLQ zone strategy. It is a different strategy. I am calculating performance statistics per HLQ zone strategies because we are claiming it is having 80% success rate. Last 2 months only we got 75%, 75 and 76% success rate. A little below 80%. But earlier months we got above 80% success rate. Okay, maybe 1 or 2 months, okay, we can accept because in average the overall trades are above 80%. So that's why we every month, every day, it's not every month, every day we are capturing the statistics. The 2 reasons why I am doing this HLQ zone analysis. So one thing, you people gain some experience by learning how we are fine tuning the zones, and sometimes new concepts you are seeing, that way you will be learning. Second thing, I have a proof of data. Every video we are recording, anybody who wants to see how our zones are performing, everything will be there in the YouTube. It is like an open book. Any particular day, what are the HLQ zones executed, how they executed, how our zones are working, will be there in the YouTube videos. We have so many HLQ zone everyday videos are available for the last 1.5 years. So it's like we are maintaining all the proofs about everyday HLQ zones. Okay, but HLQ zone, these pierced zone strategies are, at present I don't have any interest on identifying. We know it is a powerful concept. We know it is a new concept I developed. But still, the success rate, maybe as of now, they're all giving good profits. They're looking very powerful. Why we are saying very powerful? See, recently what happened in Nifty. See, this is the pierced zone strategy only we developed. Inside a monthly zone, we have a pierced weekly zone. Inside the pierced weekly zone, a newly created 75-minute zone we identified. Those 75-minute zone we fine-tuned to 5 minutes. This is the 5 minutes area. Prices entered into this zone on Tuesday. Tuesday it gave you 100 points during the intraday. And if you are a short-term trader and still holding, see, yesterday it gave you 200 points. And today again it gave you another 200 points. Already it gave you 500 points in last 3 days. And who gave these 500 points move from the HLQ zone? Sorry, not HLQ zone. From the pierced zone strategy, the newly created order flows within the weekly pierced zone. Of course, weekly and daily together, because weekly zone overlapped with daily zone. So somewhere that area we got this zone, and we got this fine-tuned 5 minutes order flow. Similar kind of situation you will see, even much better situation in BHARTIARTL. Because today intraday, how the pierced zone has given you good profits, you will understand. The reason is the new order flow is created today only in the pierced zone. What is the pierced zone in BHARTIARTL? The stopped out trade, that 75-minute zone. See here. This is the 75-minute zone. Rally, base, rally. See today, our trade is stopped out. Prices went down. Again, same candle. Again, prices were moving up. And price closed inside the 75-minute zone. So it is a pierced zone. If the price is closed outside the zone, it is a completely violated zone. We remove the zone from our charts. But why we didn't remove? Because it is a pierced zone. Who made it pierced zone? Institutions. While making this pierced zone, what they will be doing? They might be creating new order flows where you can see in lower time frames. Current time frame is 75 is a pierced zone. Maybe in the 15 minutes time frame, they might have created a new order flows. Let us look into that. Before that, let me delete this violated information so that you get clarity. From this candle, when prices are moving, any new order flows are created. Let us check. Go to the 15 minutes time frame. See, in the 15 minutes time frame, institutions created a rally, base rally. Let's draw the 15 minutes zone inside the 75 minutes pierced zone. So this is a 15 minutes demand zone. And within this 15 minutes demand zone, if you are planning intraday, you can't take trades from the 15 minutes. If you are a short-term trader, if you want to hold the position, maybe you can take a trade from the 15 minutes zone itself. But before taking, we should ensure there should be a 5 minutes order flow, otherwise zone will be violated, right? Okay. But if you are an intraday trader, you should take trades from the 5 minutes fine-tuned zones, because otherwise risk management is very difficult. So go to the 5 minutes time frame. In the 5 minutes time frame, you are seeing, see here, a rally candle. You have two base candles. You have a rally candle. Let's draw 5 minute zone here. The fine-tuned 5 minute zone. The fine-tuned 5 minute zone is inside 15 minute zone. This 15 minute zone is inside 75 minutes pierced zone. Now go to 75 minutes time frame. See, you are seeing. This is a rally base rally. It is a pierced zone. Inside the pierced zone, new order flows are created by the institutions. Okay, now again go back to intraday. 5 minutes candles. See what happened? Today prices reached and you got a trade when the zone is created at 1040 candle. When again you got the trade, 1055 candle we got the trade. It picked up the orders and sharply it moved and reached 15 minutes target. Go to the 15 minutes time frame. Is there any 15 minutes target? Yes, here you have a 15 minutes target. Drop 1, 2, 3, 4 base candles and drop. Let's draw the zone here. This is the 15 minute supply zone. When you got the trade at 10:40, let me go to 5 minutes, you get better clarity. You got a trade at 10:55 minutes, 5 minutes candle, and when it reached the target, this is the candle itself. Maybe better clarity next candle. Also you can say. So 10 o'clock 5 minutes candle, it reached the target. If not, 10 o'clock 10 minutes. You got 10 o'clock 55 minutes. So that means within 15 minutes your trade is completed. Excellent, right? Second trade you see. Because first you got a successful trade. Second trade you can take more risk by keeping some trailing stop. If you keep a 5 minutes trailing stop, none of the 5 minute zones are violated today till the market closing. See here, the first 5 minute zone, rally, base, rally. Is it violated? No. The next one, again this is the one. This is the drop, 2 base candles and a rally. Is it violated? No. Next, when the zone is created, here it is created. Drop, base, rally, or rally, base, rally again. Again rally, base, rally. After that, follow through candles. Prices were moving up and down here. Why? Because the market, this is at 245. If anybody is taking trades in the cash segment, intraday trades, they have to close by 245. Otherwise, your broker will be closing your trades automatically. So obviously some selling pressure will come, profit booking. Who knows, maybe tomorrow further it might be flying further. Like what you are seeing in Nifty. Or maybe it may come down, anything will happen. Short-term traders might be holding the prices. Intraday traders might have closed somewhere here. The first one already you reached. Second one, if you are keeping trailing stop till this 245, let us assume at 245 somewhere here you exited. How much profit you would have got? Can you imagine? Anyway, now I don't want to calculate the profits because every time I am doing, you won't learn anything. Now you do the calculation part. What you have to do? Take an entry, book the profit here. How much profit you would have got? What is the ROI you got in one futures margin cost? You calculate. Second, using trailing stop loss, you want to capture more. Let us assume you captured up to this 245. At 245, somewhere here, you exit. And capture what is the profit you got from here to here. Calculate the ROI. Put them in the comment section. Because I also want to know how much profit this Bharti Airtel pierced zone strategy would have given to us. Somebody please help me. Calculate this and put them in the comment section of this video so that we know how much each of the trades. I'm sure second trade double the profit it would have given. From here to here, probably the same distance from here to here. And double the ROI it would have given. Who is the reason behind giving all these profits? Pierced zone strategy that you learned in lesson 28. Pierced zone is no concept available in the market. It is the one I developed. In the phase 1 you learned those concepts. Until lesson 28 you might be thinking pierced zone concept is a waste concept. Isn't it? Because that is how we learned. Pierced zones means okay, it is just a zone. We can't trade the zone. And the zone will be used only for just the target's point of view we will be using. This is what you know till you learn lesson 28. But lesson 28, the moment you learn the strategies, many of you might have been surprised. The reason is you have seen on that day we discussed several examples. Maybe, I don't know, maybe 7 or 8 or 9 or maybe more than 10. I didn't remember the number, but I am sure so many examples we discussed on that day. With the help of our software, we generated and we got the pierced zones and analyzed each and every one in the live recording session only I analyzed. In that video. Every time we are analyzing, every stock is giving profits to us. Maybe except 1 or 2, but remaining all gave the profits. Pierced zone strategies. And now, in the live situations, you have seen what happened to Nifty for the last 4 days. Those lesson 23 already happened stocks we analyzed, but live market we have seen Nifty. When you have seen live market, because on 14th January we analyzed Nifty monthly demand zone. While analyzing Nifty monthly demand zone, we identified inside Nifty monthly demand zone we have a weekly pierced zone. That is also having a daily zone overlapped, that is also pierced. In that area, somewhere in that area, the overlapped are little above that, a new 75 minutes order flow is created. That new 75 minutes order flow only we have drawn on 14th January in Nifty. See this thick dark green color, this is the one fine-tuned 5-minute zone we have drawn on 14th January. But when prices reached 4th March it reached after 1.5 months. And from the pierced zone strategy, till all these days, Nifty is giving intraday profits, but the moment it reached pierced zone strategy, it has given you short-term profits. Last 3 days, it gave you 500 points move. That is the power of pierced zones. And today we have seen Bharti Airtel. These are the live examples, right? Bharti Airtel, it gave you 2 opportunities. This is the first one and this is the second one. Second one is the huge profit. Of course, first one also, I hope it could be a decent profit. But anyway, after seeing your comment section, at least I will know how much profits the pierced zone has given today. That to see, when you got the profit here at 10.55. and completed in 15 minutes. Next one you got at 11:25. You would have carried up to 2:45, or maybe at 2:30 you would have closed this somewhere here. Anything would happen. Or 2:45 till 2:45 you would have captured the maximum profit, because none of the 5 minutes zones are violated. This is the power of pierced zones. That's why everybody should learn, because the biggest advantage for you is very beginning itself I introduced the pierced zone concept. You people are not aware. Those who completed NeoStock training, you're all aware pierced zones right from the beginning, because I integrated pierced zone from the beginning, the core concepts of our supply demand zone. People know about only tested zones, people know about violated zones, people know about fresh zones. That's it. The fourth one I introduced is pierced zone. That's why you know that concept early from the beginning itself. It's not a surprise for you. If at all any surprise, the surprise you have seen in lesson 28. All of a sudden, our understanding is changed. All of a sudden, we are started respecting the pierced zones. Earlier, we thought it is a waste zone. But today, we are thinking it is a powerful zone. The moment you learned the strategy, you understood. So this is the beauty of some of the new concepts we developed. Okay, and remaining, let me quickly close one by one. This is the BHARTIARTL. And next one, I'm not going to explain fine-tuning the zones. I have to close the video. Already it's late. Let me go to daily time frame. See, daily we have a Coal India fine-tuned 5-minute zone in this area inside the daily zone. This is a daily zone. This is a 75 recently created. We have a fine-tuned, but today prices did not reach. We didn't get a trade. Next one is Indian hotels. Indian hotels is a high liquidity supply zone. Daily supply zone. We have a two fine-tuned 5-minute zones here. But today prices did not reach. And next one is Manapuram. This is also its daily high liquidity supply zone. And here the price structure is not good. If you look into the 75 minutes zones, you may not see any proper 75 minute zone. But above, did you notice there is a 5-minute HLQ supply zone? I looked into NeoStock software supply demand zone chain, and here I identified the 5-minute zone is a 5 minutes HLQ supply zone. So I am thinking maybe institutions will use this zone as a bull trap. Once the zone is violated, bulls will be captured. That is what I am hoping by seeing high liquidity zones. Possible bull trap, this one. And next one is power grid. Power grid is also having multiple order flows, but price did not reach today into this fine-tuned area. And Tech Mahindra. Tech Mahindra is also Tech Mahindra is also a 75 minutes daily. This is also 75 minutes high liquidity. Daily. We are in the daily time frame. Sorry. This is also daily. Drop 2 base candles drop. Drawn 75 minutes, but I did not draw 15. That means order flow is not good. Mostly such kind of zones will be violated in the coming days. Next one is INFI. INFI is a 75 minutes demand zone. High liquidity demand zone. We have a fine-tuned zone here. We have a fine-tuned lower time frame zone. The daily area, 75 minutes area, no order flow. But here we have an horizon. The horizon, 15 minutes horizon. 15 minutes horizon is having fine-tuned 5 minutes horizon. Today prices did not reach into this area. And Jindal Steel, here also 75 minute zone, and it is having a fine-tuned 5 minute zone, but today prices did not reach. And next one, Concur already we discussed, morning 9:15 candle. We got a trade from this fine-tuned area, but we can't take the trade in the 9:15 candle, because you already learned the risk involved in taking trades from 9:15 candle. Escorts is already we discussed. We got 1:4.2 RR we got. And Hero Motors also already we discussed. Here also we got 1:3 RR and 6% ROI we got. And next one is IRB. IRB also we discussed. See, this is opened with gap up in morning 9:15 candle, 1 minute candle. If you would have taken a trade in the pre-market, you would have got a huge loss today because price opened beyond your stop buffer value. That's why 9:15 we are avoiding. Same is the another example for Tata Motors also. Tata Motors also opened here. Maybe luckily prices came down. In case if they did not come down, if you would have taken how much loss, can you imagine? Here, this is our, somewhere here it could be our stop buffer, but instead you exit here, how much loss we get? And Union Bank, 9:15 candle, such kind of trades, price actions will be tempting us. Why can't we take a trade in the 9:15 1 minute candle? By seeing it given excellent profit. But you already seen what will happen in Tata Motors and IRB. If you take trades or pre-market trades. So these are the risks involved for intraday traders. So that is the reason why today you got a very good lesson. You got a good practical examples why we should not take trades from morning 9:15 candle. So this is about today's HLQ zone analysis. Hope this information will be useful to you. Definitely, you got a very good learning today from several examples. Let's all meet again in our next video. Thank you.